Hey everyone, and thanks for jumping back into the cryptoverse. This is NFA Live. We do this theoretically every week, but we have missed a couple of weeks here and there due to people being out of town or people being sick. But anyways, if you guys are new here, make sure you guys go subscribe to Guy from Coin Bureau. His link to the channel is down in the description below, Coin Bureau Clips. And then Rob from Digital Asset News. Make sure you go check his channel out as well. We'll rotate the show every single Thursday. How are you guys doing today?
Great. How you doing, Ben?
Sick as always, but pretty good.
That's okay.
How about you guys?
Sorry to hear that, Ben.
Yeah.
Ben's always sick. I mean, those kids run around and like he goes to get antibiotics. He takes them like for 3 days. He's like, that's good. And then now here he is sick again.
Well, anyways.
Not medical advice.
No, medical advice.
Well, we got plenty to talk about. I mean, in the markets. The markets are obviously pretty interesting right now, but I do want to go through a few questions. We're going to talk a little bit about, what are some of the good things that are going on. I know you both of you guys cover a lot of the new developments in the space, so we'd like to hear a little bit about those because if they watch my channel, they really never get to hear about that stuff. I also want to talk a little bit about the ETH supply. The ETH supply has been going up recently. Now, since the merge, the supply is still down. But I mean, I think this is kind of getting into the phase where there's just not necessarily enough demand in crypto to continue that deflationary trend. So I'm curious as to how long do you think this new trend will go on for before potentially reversing course? We'll talk a little about the spot ETF stuff, even though I feel like it's mostly the same stuff. There's not a whole lot to talk about, honestly. And then I'd also like to discuss the S&P 500, maybe talk about the oil, the bond market, the dollar, all that good stuff. So Guy, why don't we start with you? Because I know you guys cover this stuff weekly, right? Several times a week, you'll talk about new developments in the space, what's going on. On my channel, we just talk about the altcoin reckoning and that kind of stuff. But what are some recent good things going on in the cryptoverse that maybe have been overlooked by a lot of people just because they've simply been more focused on price action? And it's those news pieces, or what gives you confidence, I guess, in sort of the future of crypto? What do you see going on right now?
It's a great question, Ben, and I think it's great to focus on some of the good news for a change, because it is so easy to get kind of wrapped up with all the bad stuff, all the negative news. And I mean, it's an unfortunate thing, isn't it? I think we've talked about this before, but kind of bad news gets clicks, doesn't it? So even we were talking about this earlier in the week here at the office, how if we were to put out a video, some great stuff, something great about crypto, me smiling, green everywhere, people wouldn't watch it. But if we put out a video, me looking sad, is this the end ? As the title, then that's what people click onto. It's unfortunate, really, but bad news does get clicks. But anyway, that aside, there is lots of good stuff going on, and I think probably the first one to touch on is something that is actually good for us. It's a bit like a kind of dose of castor oil or something, but it's good, but it doesn't feel like that, and that is that regulatory clarity is inching closer. We're seeing this. Yesterday's hearing with Gary Gensler, House Financial Services Committee, I think was a good example. It showed, even though the frustration was evident with what he's doing and how the SEC is going about its business under him, it did show that there are increasing numbers of pro-crypto people in Congress who are frustrated as we are with the SEC, and who understand that this is hurting US competitiveness long term. So that I thought was a timely reminder that we do have people in Congress going into bat for us, and that's really important. And that is the case. There are pro-crypto politicians in jurisdictions all over the world, and one that springs to mind is Argentina. That's another bit of good news. We talked about this in a video a couple of weeks ago, but Argentina now has this. He's a fairly sort of colorful character, but this presidential candidate, the guy with the absolutely extraordinary haircut, who is very pro crypto. And that's, that's another good example. Politicians are waking up to the benefits of it, and the fact that crypto in many cases can be a vote winner, not just because it offers a way for countries like Argentina potentially out of the the massive hole that they've been dug into by previous governments. So I think inching towards regulatory clarity is a positive. It doesn't mean that the regulations that we're going to end up with in whatever country are necessarily going to be all that great to start with. But we need to get to that point where we do have some clarity, where we do have regulations, where crypto projects and companies do have some boundaries in which they can operate. Because once we have that, then everything's clearer, and then the lobbyists, the companies, the industry as a whole can kind of move forward to get those regulations cleaned up, to make them more competitive, to make them more accommodating. So yeah, it's a painful process, but we are getting closer. So that, I think, is a big positive, the fact that regulatory clarity is inching forward. There's also other bits of good news. We've talked quite a lot about the ETFs, the ETF applications. That is good news, for prices, if nothing else. Even if the approvals are still some way off. But I think we're going to talk about that a bit later on. James Seyfarth at Bloomberg pointed out not long ago, earlier today, I think, ETH futures ETFs actually are due to start trading next week, I think. So that's another positive. That is going to facilitate access to crypto for institutions and others. One other thing I wanted to point out as well. I've banged this drum for a couple of weeks now, so I won't dwell on it too much. But sentiment in other parts of the world, outside of places like the US and the UK, sentiment in places like Singapore, for instance, and Asia, from what I've seen, is a lot better. And we are seeing exciting integrations. A good example, Grab, which is kind of Asia's version of Uber, and based in Singapore, I believe, is integrating USDC. We're also seeing things like Visa is expanding stablecoin support. We've got these integrations happening all the time with kind of, if you like, the legacy financial system. Visa's also been experimenting with Solana and with other blockchains as well. And if you look at that in the context of what's happening with regulations, all that scrutiny, then that is particularly good news, I think, and especially all the FUD that surrounded Solana as well. Visa either has looked under the hood and sees a lot more potential, or it's taking a massive risk experimenting with Solana. But either way, these integrations are happening and being forged ahead. So there are a few other things I want to talk about, but I'll pass over to Rob for a bit. But those are a few things I think are net positives.
Yeah, for sure. I mean, the regulatory clarity is definitely a good thing, and it seems like we are slowly getting there. But at least and I mean, look, going into all this, I think a lot of people just thought the SEC would sort of sweep everything, but the SEC just keeps getting, basically keeps taking losses for the most part on sort of coming after crypto. So, Rob, what about you? Like, I know you also frequently talk about positive developments in the space, whether it's adoption by various, in various sectors. What are you looking at that's good? That's overall good for crypto that maybe people have overlooked because they've been focused on price.
No, there's like just what Guy said. There's a lot of good things going out there. I'll make this as quick as I can. If you can throw up my screen, and it just goes like this. Like, we've got almost less than 200 days before the Bitcoin halving. And of course, I think that's a pretty big thing. So everybody has to remember that the time marches on. Bear markets don't last forever. And when bull markets come, you have to take that opportunity. Also, like, if we take a look at like the positive things that are going on and just Bitcoin blockchain, Marathon Digital came out, one of the biggest mining operations. They said, yeah, we mined an invalid block yesterday. And everybody was freaking out, but they said, no, this is just us doing some different features that we were trying to do. But Bitcoin functioned exactly as designed by excluding the invalid blocks. I know people worry about like, what's going to happen with the miners and if they really get together. But here's an example of Bitcoin doing exactly what it was supposed to do. Also, we got Tim Draper coming in, billionaire, and he's looking to invest massively into the crypto market. And he's not just doing like a Y Combinator. He's actually going, you know what? I'm going to invest in here as far as like the US and the crypto projects. I'm going to put a ton of money into it, and we're not going to leave. We're actually going to have like a 10-year horizon. Chainlink comes out, does cross-chain interoperability protocol. It's available on Base. And on top of that, they also just did a tokenization experiment with Swift, which is tokenizing assets and moving them across the entire world. And this is what BlackRock's CEO talked about. The future is tokenizing assets and moving things around. Chainlink did that. And then just to piggyback on what Guy talked about as far as the other places like in Singapore, you know that South Koreans, they hold $100 billion in crypto. What's the crypto market now? Like 1 point something trillion, 1.1 maybe. So like you got 10%, and it's by South Koreans, and they have a population of over 51 million people. So I know that we're not doing too hot in America, but it gives me hope that as far as like globally, we see things that are going on. And then there was a project called Aster. It's like ranked 122. It's in the Polkadot ecosystem. They just signed a deal with Sony and Toyota to do all the things that they need to do with blockchain tech and things like that. And then one of the things I think, which is good for us and the people on my channel, Celsius. This is from Aaron Bennett, and it looks like they're going to start paying out and actually have recovery. And the recovery is going to be between 67% and 78% for the Celsius users. And that could be in the new co, and that could also be giving Bitcoin, or excuse me, crypto back. So that's a pretty big win for Celsius. Voyager came out and they gave 35% back. I know it sucks. At least we got something back. And then the big one for me, this will just piggyback on the Bitcoin halving. I did this show a couple of days ago called the 80-20 rule. And what we took a look at was just how many different cryptos have actually made it out of 2017 as far as like 2021 for the high. But the big thing was like the lows. Because I know like right now it kind of sucks because you see like you're throwing sand in the ocean. I know, Ben, you talk about this and like the black hole that is the altcoin market. But if we take a look at the all-time low date from the all-time low high from the last cycle from 2017, the dates, it's always a year after roughly for the Bitcoin and altcoin highs. So like we had a high around December 17th, 2017. And then the lows we saw like a year later in 2018, or it was in March of 2020 when we had this thing called a pandemic. I'm not gonna get into all those things, but it's either that time or the time later. But the big thing that I saw was the all-time low before the halving. And out of the top 53, only two. One was Vertasium because of SEC fraud. Another one was called Salt, and there was also a lawsuit there. So again, as we move into the Bitcoin halving, and we'll talk about maybe as a recession comes, that maybe some kind of issues will come up. But I see these things as very positive developments. And that's for my positive side, so everybody can like be like, hey, it's not so bearish out there.
Well, you certainly came prepared.
I had to, because damn it, last time we were kind of negative, and I was like, I got to give some people something what they want.
Yeah, I mean, just to everyone. Sorry, what'd you say, Guy?
I just wanted to jump on something Rob said as well. Going back to what he mentioned about Marathon Digital, mining an invalid block, but the blockchain carried on as normal. I thought that was a great point to make, and also something that ties into it. Now, this may seem pretty tenuous, but go with me here. So early October, we have the SBF trial starting. Now, this on the face of it, I think many people could be looking at, this is going to be bad for crypto. This is going to be crypto airing its dirty laundry in public, as though it hasn't done enough of that already. And it'll be like a really bad advert for the industry. However, I think there could be a positive in it. And what I hope this trial is going to show is that the collapse of FTX, this disaster that caught the world's attention, was the actions of individuals, corrupt and fallible individuals, and nothing to do with crypto itself. It wasn't a case of blockchains failing. It wasn't a case of Bitcoin breaking. It was a case of human greed and fallibility. And I think I hope that could be an opportunity to show that actually these crypto projects, these crypto blockchains are still mining blocks. The technology itself continues to develop and to work. It's the people in the middle who are, who have been screwing up. That is the real problem. So I hope that's an opportunity, perhaps, for some people's opinions of crypto maybe to be changed. But perhaps that's a bit of a long shot. I don't know.
No, that's true.
Yeah.
I agree with you, Guy. Hopefully we can get that. And that's the whole point of us here. We're trying to make people understand that it's not Bitcoin or Ethereum or altcoins that screwed up. It's the people in the middle that really screwed us. And that really what it comes down to. I think that's the problem with like the politicians. They look at that and they lump FTX, Celsius, Voyager, BlockFi into this big thing. And it's not. It's just these people. People suck. That's how it goes.
Yeah. Yeah.
Right.
Can I share my screen with one other thing as well? Sorry, this is I don't know if you guys read the Milk Road newsletter.
No,
but it's a great daily crypto newsletter, and they publish this from Caleb and Brown. Ethereum surpasses $10 billion in revenue in 7 years. Only Google has reached that figure faster. I think that's kind of amazing.
I'll take it.
That was another bit of good news. Someone pointed that out to me just shortly before I went on air. I hadn't had a chance to read the newsletter, but I thought that was great news as well. Anyhow, sorry. Let me continue.
Yeah, no, I mean, I think there's been a lot of great news, and it kind of shows like sometimes just macro conditions can suppress prices, even if there's a lot of great news. I mean, Rob was showing how a lot of those altcoins last cycle, some of them bottomed out in 2018, some of them bottomed out over a year later, in sort of that in the pandemic. So the altcoin market is really tricky because it can bleed for a long time, and then once monetary policy is more favorable, then it often can go back up. But I wanted to go to the next part, and I was going to share my screen, but I think Rob actually just had it pulled up, so I'll just let him pull it back up when he talks. And what I want to talk about is, ever since the merge, we've heard about the sort of the deflationary aspects of Ethereum, and it's true that over the basically since the merge, the supply has gone down quite a bit, and is still well below where the supply was at the time of the merge. But I'm also curious as to what your guys' thoughts are on the more recent trend. If you look at, over the last hour or over the last day or over the last week or over the last month, the supply of ETH has actually been going back up, arguably due to perhaps less demand, because this time-based capitulation is really difficult on a lot of people, and people just sort of lose interest. So, Rob, I want to go to you first on this. What's your view on the supply of ETH going back up right now? Do you think it's a short-term thing, and what do you think it's going to take to get it back to being deflationary?
Yeah, like you said, there's a great website. It's Ultrasound Money, and usually when I take a look at this, I only look at the very first part up here, and I don't realize all the different data points that they have down here. And it's great because you can see this answers everybody's question about Ethereum. The first things first is how much gets issued and how much gets burned. And this is from the Ethereum organization. And it talks about how stakers, because we went from proof of work to proof of stake just about a year ago, September 2022. So it states that stakers are issued approximately 1,700 ETH per day based on 14 million total ETH staked. But in reality, as time has gone on, we see that in the last 24 hours. You can see it right here. ETH was issued, and this is what it's really been. Almost 2,300, so 2,280, and this is what actually was burned, is 1,263 in the last 24 hours. And why is it burned? It's because of what is actually being used in the transactions. So if we take a look just real quick at the ETH supply, it's done that. And JP Morgan made a big point about this, and they said that it's not deflationary, and they talk about how the daily active users have actually dropped, and that the actual funding or the fees have actually decreased. For me, I don't really want high Ethereum fees. I don't like to pay huge fees. That's why I think L2s are going to be the future. But of course, if you're looking at it on the outside in, as for like a JP Morgan, they look at things and go, you're not making money because you need the fees. And if the fees aren't there, you're screwing up. But in reality, that's not the ethos of crypto. So we take a look here at ETH supply, take a look at 1 day, take a look at 7 days and 30 days, and Ben and everybody else is right on this one. It is inflationary. If we take a look over the last 377 days, I mean, since the merge, we can see that it actually has gone down, but just recently there's been an uptick. Why is that? It kind of comes down to this. We can kind of just scroll down because there's not much demand, the burn. And if we take a look at the burn leaderboard, where does this come from? Well, it comes from the DeFi. Pretty much that's really the big bulk of it. Uniswap V2, Tether, I suppose, Uniswap, OpenSea, Arbitrum, MetaMask, the things that are as far as like transactions. Why aren't there as many transactions? It's because people aren't YOLOing into a bunch of meme coins that are out there. look, if you're looking for the latest and greatest meme coin, you're not going to find it too much on a lot of centralized exchanges, especially like some of the good ones. You can go the crappy ones, but I can't get into those. I'm an American. If I'm going to go someplace to find like something that I just really can't get, it's Uniswap. And then as we've gone to a little riskier assets, as far as like for altcoins, you have to go there. So if you're not going there to get these alts, you're not going to see as much demand. And then we can just see over here also on OpenSea. That's actually, I mean, how many people are really YOLOing into a bunch of NFTs? Not as many. And that's why like you see a lot of projects are actually putting things off to launch into Q1, Q2 of 2024 because they don't want to do stuff now. The market's awful. And I think everybody knows that. That's why there's been a reduction in supply and demand.
Well, once again, Rob, no one's going to criticize you here for not doing your homework.
Yeah, I had nothing to do yesterday, so I did a bunch of homework.
I'm going to give you another homework assignment. If you could plot out, or if you could map out the exact price movement of Bitcoin for the next 10 years, that'd be great.
So easy. So I'm going to give you the prediction. It's between $5 and $500,000. Nailed it.
No, I need every single move from here until the next 5 years.
Oh, there's this website you should check out, Into the Cryptoverse. You can do that over there, I think.
Well, anyways, Guy, I mean, I know Rob provided a fairly comprehensive answer. Do you have anything to add? And maybe what do you think it's going to take for the prior deflationary trend to return? Is this just a fluke that it's going to get reversed next month, or is it going to stay like this for a while?
I can see it definitely staying like this for a while because, yeah, picking up on what Rob said, people aren't using the network. I mean, OpenSea is a good example. I mean, if you think things are bad in crypto, then they're 10 times worse in NFTs. You know, the NFT space is in the doldrums and then some. And yeah, look, we haven't got people YOLOing into the next Pepe yet, on Uniswap or MetaMask or wherever. So yeah, people aren't using the network. They aren't generating fees that are then burned. DeFi is kind of, there are concerns over regulation. Regulation, again, plays a big part here, I think. Regulation of DeFi, regulation around stable coins. There's uncertainty over these. And until that clears up, I think we're going to see people less likely to use borrowing and lending protocols, for instance, less likely to tinker around on Ethereum and protocols that run there. So how does this change? Well, regulations get clearer, we hope. I think DeFi needs to up its game. DeFi security and user experience needs to improve. People need more reasons to use these protocols, and therefore Ethereum itself. So yeah, but it all comes down to the fact that people aren't using the network, and that's tied into low market sentiment. Not many people are that interested in crypto at the moment. Not many people are experimenting. Not many people are YOLOing, like Rob said. So I think, yeah, as long as these market conditions persist, I can see that inflationary trend continuing. It's got a way. I will say though, it has got a way to go. What's it at? 0.34% now. Bitcoin's is 1.74%. I think so. It has got a way to go until it's until the Bitcoin maxis can be truly in celebratory mode. But yeah, certainly I think this is probably the way it'll go for the next few months, unless some new craze comes along, unless some incredible GameFi title comes along, or another meme coin, and everybody gets completely excited again for no discernible reason. But yeah, that's how I see it playing out.
Yeah, I mean, I think those are great answers. I think my sort of thought is we've seen the Ether Bitcoin ratio drop when ETH was deflationary. So what does it do if it's inflationary, right? But we'll leave that, I guess, for the audience members to figure out what they think is the most likely route. I want to continue moving on to talk a little bit about the Spot ETF. And I know we talk about this a lot, but it does seem to be one of the main things that I just see on Twitter, like on a daily basis. There's some news about something, and Rob has been, and we'll start with Rob on this one, and then we'll start with Guy on the next one, because Rob, I know you talked a lot about these spot ETFs, and you've been pretty pessimistic about their approval for a long time. I mean, we're almost in Q4 and we still don't have an approval. So you've been right? Like the pessimistic view on their approval has been right. What do you think's holding it back, and what do you think it's going to take to get it approved?
Well, first of all, I've been right so far. A lot of people are saying that Rob won't be right next quarter when actually everything comes out, as far as like with ARK and with BlackRock and everything else, and when the final decision actually is going to be made and it'll be approved. And you know what? I hope everybody's right, because I'd rather be wrong and rich than right and poor. And I think if the ETF comes through, great. I'm happy. Everything's happy. The problem is, and there's one big problem, and there's one guy. And there's one guy who can screw everything up, and his name's Gary Gensler. And because of Gary, and again, like people say, well, he's just a stooge and he's here for BlackRock. Yeah, he may be. But right now he's working for the White House. He's working for the Biden administration. And guess what? They don't like crypto. They don't like Bitcoin. They don't like anything. They want to push that back, and they want to stifle innovation. So it's his job to push things back, I think. So there's because who are the middlemen? The middlemen are the banks. And guess who pays for a lot of the things for the senators and congressmen, for the election process? So for me, I think that is one of the issues. And then I will just say this, again, man, I hope I'm wrong, and I hope things work out. But Ben, just one thing, can you throw up my screen? Remember we just talked about Celsius, and we talk about how it's great that it's actually going to come through and they're going to pay back investors, and it was a pretty awful situation. Here's the problem. One of the people that are one of the individual or corporations that are going to go through with the process is Coinbase. And the SEC and everybody didn't have an issue with this process that's going to happen actually with Celsius, except for the SEC. And the SEC had a problem with them. And it says right here, taking issue with the role of Coinbase in the plan. Coinbase agreements go far beyond the services of a distributing agent, contemplating brokerage services and master trading services that implicate blah, 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 blah. They're just been out of shape with Coinbase. Here's the problem. Who is going to be the oversight? Who's going to be for to hold all the Bitcoin for all these different spot Bitcoin ETF process? It's Coinbase. SEC has already sued Coinbase. I know it's a different company. Besides, there's like Coinbase custody, there's Coinbase the exchange, and Coinbase whatever else is doing now. But for some reason, the SEC has a big issue with Coinbase, and that's the one that's their one main sticking point as far as for regulation and oversight, is how we're going to stop manipulation. I'm not here to say that. We see that in the gold markets and the precious metals. SEC is an issue. I think that if they're going to shoot it down, it's going to be because of this. So again, hope I'm wrong. I'll pass it over to Guy, and he probably has got something more positive to say than I do.
Well, I mean, if you're right 5 years in a row and then I'm finally wrong, I mean, I don't really think people say you're wrong, right?
Yeah, exactly. But I will tell you this: it's going to be approved at some point. It's inevitable. I just don't think it's going to happen right.
So what you're saying is you have the right to change your mind at some point and say, all right, now I think it's likely going to get approved. Right.
Yes. See,
so
Ben giving me an out. Thank you.
Right. I mean, that's the thing. Well, it's sort of like price movements, right? You should be allowed to change your mind about stuff, especially as new data comes in, right? So like if new data comes in and a lot of the bigger issues that the SEC has been worried about, if there no longer are issues, then perhaps it would be more likely to happen, right?
Yeah.
Guy, what do you think? Are you in agreement here with Rob?
I am. Well, I've got to say, like the thing that really bugs me about this is, okay, the SEC doesn't want to approve these ETFs. Why? Like, I can't understand why the SEC shouldn't be compelled to explain why it's not doing so. What its big problem with these things is. That strikes me as crazy. Now I know they've kind of. Like Rob was saying, that they've got a problem with Coinbase, and crypto, the custody of the Bitcoin, backing these ETFs, I think has been flagged as an issue before. They've also talked about market manipulation, supposedly a big problem for the SEC with approving these ETFs. The thing is that they've approved futures ETFs. Like I said earlier, ETH futures ETFs are supposedly going live next week. Bitcoin futures have been around since 2017. Futures markets are much, much easier to manipulate than spot markets because, there's more moving parts. Spot instruments are not nearly as difficult to manipulate. So for me, that this market manipulation idea just does not make any sense. And I think it's crazy that the SEC shouldn't be compelled to explain its reasoning on this. In terms of other reasons why they haven't approved it yet, and what I think will probably happen, I think one of the reasons they haven't approved it is because they don't have to. They can kick the can down the road for most of these until I think it's March next year, and so that is exactly what they will do because they can. This goes back to what Rob was saying. The SEC has a problem with the industry as a whole, so it will make things as difficult as possible. So that means they can delay, and I'm pretty sure that they will delay on all of these applications for as long as they possibly can. Another thing that has been flagged up as well is this potential government shutdown that is supposedly getting close now in the US. Now, as I understand it, if this does go ahead, and this is a row over sort of government spending, as I think so, if this shutdown does go ahead, that is going to mean huge numbers of federal workers are put on furlough. I believe the SEC is due to have 90% of its staff furloughed in the event of a government shutdown. So they're going to have to run with a 10% skeleton crew, which is absolutely great news if you ask me. But what I think it does mean is that they will, that is probably a pretty good excuse for delaying, because they're basically just going to be trying to keep the lights on there. So that could be another reason for the delay. I think that's I've seen that cited as a possible reason for the most recent delay. So yeah, and I think for those reasons, we will probably be waiting until the last possible moment. I do agree with Rob. I do think they will be eventually approved, but at the last possible thing. There could also be a sense that they're looking to see how the ETH futures ETFs fare before they approve a Bitcoin spot ETF, possibly. And there's also, I think, the undeniable sense that Gary is a former banker. He's a former Goldman Sachs guy. I would say he is still very much aligned with the interests of the mega banks, as well as with the administration that he serves. And I think the mega banks and the asset managers are kind of, I think, on different sides of this. The asset managers, they want these ETFs. They want to start making money on these things now. That's why they're, it's not because they're interested in crypto necessarily. It's they're interested in making money, and they know they will with spot ETFs. Mega banks, I think, the JP Morgans, the Bank of Americas, the Goldman Sachs, etc., are much more hesitant. They don't want to see inflows into crypto because crypto is much more of a challenge to them. Gary, I think, is on the side of the mega banks and therefore will delay. So yeah, my guess is early next year at the latest possible opportunity.
Sounds reasonable. Also appreciate the comprehensive response on that. These things, I guess, just take a lot longer than a lot of people have thought they would, but I think we will get there eventually. By the way, we are going to get into the last question, but if you guys have questions for either of these guys, make sure you put them in the chat, and that way we can throw them up on the screen, and we'll try to get through a few of them. We only have four questions this week, so we have more time for Q&A from the audience. Last question, Guy, I'm going to start with you on this one first. Mm-hmm. And the question here is, okay, we have the S&P 500 is dropping. Crypto is not dropping, right? Not just yet, but oftentimes it moves more discreetly, where it'll just sort of hold where it is and then move to where it's going to go very, very quickly. But we have the S&P dropping. We have oil going up. We have the dollar going up. We have bonds dropping, right? Like TLTs has been plummeting. And that was a lot of people's sort of their hedge, right? Their safety trade. But a lot of times the bond market doesn't bottom until we're close to a Fed pivot. So I guess my question is, should the market, do you think the market should be more preparing for a pivot by the Fed right now? Or do you think they should be preparing for higher for longer? Because there's a lot of polarizing opinions out there as to what's really going on.
Yeah, good question. I am inclined to take Jerome as his word. Jerome Powell has been pretty consistent with this higher for longer narrative. I remember that was a big feature of what he said at Jackson Hole last month. The Fed itself is still pretty hawkish, and Jerome is as well. And look, before we can start talking about a pivot, we need to have a definitive pause, and we don't yet have that. I mean, they didn't raise rates at the last meeting. I think the Fed Watch tool is sort of around sort of 75-80% that they will not raise rates at the next meeting. But remember, there is one more rate hike projected before the end of this year, which means they either do it at the next meeting on the 1st of November, or they do it at the December meeting. So, although we're getting close to the pause, they haven't officially paused yet. So that's something that I think we definitely need to see before any talk of an actual pivot. It's interesting. You mentioned oil prices as well. I think that's an interesting one to look at. I mean, a stronger economy with a less restrictive monetary policy is likely to drive oil prices themselves higher. And but what's interesting is the Fed obviously can't really. There's only so much the Fed can do when it comes to oil prices. Oil is driven much more by OPEC, and at the moment, OPEC kind of restricting supply. But if we continue to see higher demand from industry, in the US and elsewhere, then we could see oil prices going higher there as well. Now, that higher oil prices could also lead to a higher USD, a higher DXY, because higher oil prices contribute to inflation expectations, and therefore higher inflation as well, which could mean which could put a pivot even further away. So. Yeah, I personally think a pivot. I personally think higher for longer.
Yeah, it's interesting because I mean, like in the SCP, the Summary of Economic Projections, they definitely are expecting another rate hike, at least the median number of participants. But the bond market still thinks that we might not get another rate hike, and I mean, that's possible. I mean, I almost wonder if 5.5 could be the terminal rate. And maybe if they pause again, or if they skip again in November, maybe we get some type of sort of rally into a recession type thing, and then they end up cutting, and then we sort of finalize the business cycle. But Rob, where are you on this? I mean, look, the bond market is saying no rate cuts until July of 2024. I mean, that's almost like 10 months from now, right? And normally risk assets don't even bottom until after the rate cuts actually occur. So do you think the bond market is being a little too optimistic here on the amount of time it's going to take before we get a rate cut? Therefore, higher for longer is what people should be preparing for? Or should people be preparing for a pivot?
Yeah, well, I'll make this quick. I think that the bond market is usually the forward-thinking type of big players in the game. And of course, that's what drives up the price for the bonds themselves, because they know something before it actually happens. And if you could just show my screen real quick, and I'll go through this quickly so we can get to the Q&A part. So we know that the Dixie itself and the dollar is it's stronger, and it's getting stronger, which I think is a big problem for globally, and for the debt that is all about. And people have debt, or organizations and countries, they have debt in the dollar itself. Of course, this goes up, and it's going to be a problem for globally. Now, domestically, as far as like the economy goes, we're still pretty strong. We can see like the initial claims. If we're looking at, 2023, initial claims have gone down. Only just last month did it go up just one tick, and it wasn't even that much. And we take a look at the unemployment rate. For quite some time, we're nowhere near. Pre-pandemic, all the way over here, unemployment in 2014, 6.7. Now we're looking at, we've been going again a little bit down, and then we just had an upkick to 3.8%. I don't see how unemployment rate is actually going up. It seems like everywhere I look and all the people that I talk to, people can't find workers. And that's just kind of how it is. So the unemployment rate, if it goes up, sure, but government, and we'll see how that fares out. Now we take a look at the S&P 500, like you talked about. Last 5 days down, 1 month down, a 6 month. It's been pretty good, but if you look over 5 years, it looks like, we peaked out in 2021. And now we kind of peaked out over here in 2023 at 45, and we're going down. It looks like we kind of rallied, and then we just kind of came down a little bit. And it looks to me like it's like we talk about, we rally into a recession and there's like a little bit of a drop off. And again, if we just take a look at this, as far as like the pivot from the last, the Great Recession, 27, 29, it took 18 months for the actual top to the bottom. The pivot, when actually things pivot, and it was like a 50% crash of the market. .com was 38%. Gulf War, you can see 4 and 16. So again, it looks like, it just looks like, you rally into a recession, you drop off a little bit. And you can see it over here. We take a look at we overlay the S&P 500 with the M2. You can see that it's like, right now, for the Great Recession, 07 and 09, it's like we rallied into the recession, and then there was a little bit of drop off, and then we had a recession for quite some time. I will, just to note that the market recovers first, and then the economy recovers, as you can see here, as far as like the recession and time frame. And the same thing happens over here. It's like we rally into recession, do a little bit of drop off, then we rally again, and then we take a dip. The market recovers, and then here's the recession. The same thing happened in the 90s. We can see a little bit here, rallies in, drops off a little bit. It pivots, or they pivot over here. We get a recession over here. It drops off, and now here we are. And of course, the market recovers first. So again, when the Fed pivots, and if it happens all the way in time in like the next year, you're going to see more drop-offs for the market. And what does that mean for risk assets? More of a drop-off. That's why I'm hoping for a recession now as fast as we can get it, because it's coming anyhow. And I will just, lastly, recession, the recovery goes pretty fast. 1 year from the trough is when we actually saw, from the Great Recession, the early 80s, 1990s, it only took about a year for it to actually go from the bottom to the top. And as a reminder, recessions themselves, don't get scared about them. It's a natural part of the cycle. Even from the 20s to the Great Recession, it averaged about 10 months. So we average a recession for 10 months and the market recovers, that's good for us. Because if it happens now or happens in Q1 of 2024, that means that we can recover in time. We get a Bitcoin halving and we rally into the next, hopefully, bull run in 2025. But again, we'll see.
Yeah, it certainly seems like that's the direction we're headed. Or sort of the business cycle will end with a recession, but with a recession likely comes liquidity again. And when liquidity comes back, that's normally when crypto shines. So let's talk a little bit here about some of these questions. So here's a question. I'll go ahead and throw it up on the screen. Why are people so excited about centralized entities using Bitcoin for, ETFs, when it goes against most of the Bitcoin ethos? It looks like on X people are 50-50 divided about it. It's a good question. I feel like there are polarizing views on it for sure. Either you guys have a strong opinion on this?
Guy, what do you got?
Well, I think, I think a lot of the excitement, and I think this is a really good point to raise. And I've seen a few people in comments say this before. Why are we necessarily celebrating huge centralized TradFi entities like BlackRock et al. getting into Bitcoin? Is that what it was designed for? And the hard answer to that is no. It wasn't designed, I think, to be an institutional asset. So yeah, we do have to. I think that's a timely reminder. We do have to kind of scale back excitement on this a bit. Like, it will be positive for Bitcoin's price. It will be positive for people who hold Bitcoin now, and the longer you've been in it, the better. But whether it will be long-term good for Bitcoin, the asset, and the crypto space as a whole is not so sure, because TradFi wants to, there are elements within TradFi that want to make crypto a part of that system. And once it becomes a part of that system, it ain't crypto anymore. And it will just be exactly the same as it is with other elements of the financial system. The big guys will make all the money, and the rest of us will all be fighting for the scraps at the bottom. So yeah, I think, I'm encouraged. I must say, one of the positives that I think has come out over the last year or so since the collapse of FTX, I think that the statistics show out that smaller holders, Bitcoin shrimps and crabs, for instance, have generally been accumulating a lot more, and I think that's a really positive sign, and I hope that continues, because it is. We should remember that we don't want BlackRock and all these other asset managers to be hoovering it all up. That's something we should be aware of, and that's why it's so good for as many people as possible to hold Bitcoin.
Yeah, I mean, I think I tweeted about this at one point too, and I was like, it's interesting after last cycle where most people had to learn the hard way, not your keys, not your crypto, and it almost just feels like we're sort of going back into that again. It's sort of seen as it's with potentially a safer entity or something, therefore it's not as bad. But I feel like for me, what it means is sort of what I feel like I've known all along and it's that most people are here because they think prices go up, right? That's why a lot of people are here. And that's why oftentimes in bear markets, the tourists leave. A lot of people leave because they're just not interested anymore if the prices aren't going up. And I think a lot of people are excited about it because it means that more liquidity could come into the market, and therefore, theoretically that prices could go up, not necessarily caring as much that it likely means that a lot of people aren't actually going to have the keys to their Bitcoin. But it probably just shows you what they value more, right? Do they value that side of Bitcoin more, or do they value the prices go up side of Bitcoin more? Which is probably one of the reasons why we get these polarizing views. But it's an interesting thing, nevertheless. And I mean, I do think it is going to happen at some point, right? It is going to happen, and it will likely bring in more liquidity into Bitcoin.
Yeah. Can you necessarily blame people for wanting an asset that they hold to appreciate massively in value?
Right. No, that's why. I mean, no, that's why I'm here. I don't shy away from that. I'm not here to for the community. I think a lot of people should be honest with ourselves. A lot of people are here to invest and invest in good projects that appreciate in value, right? That's why people invest in the stock market too.
Yeah.
They're not investing in Microsoft or Apple just because they want to feel like they're a good person, right? or they want to do it. Yeah, I mean, they want to do it because they want to make money, right? I mean, but you can invest in things you like, but I guarantee you, if crypto prices only ever went down, people would leave. You're not going to hold on. You're not just going to talk about it forever if the prices only ever went down. So, yeah, I mean, I think that's the main reason is just prices. A lot of people want the prices to go up, and who can blame them? And everyone wants the prices to go up over long haul.
Yeah, unless the government stops printing money, all the assets that you own have to go up because the government's not going to stop. So it's up to us to make sure.
Yeah, I mean, you're basically almost forced to figure out these ways to even just keep up with inflation. If you earn, so what if you earn 5% or something? If inflation was at 6%, then you still lost money.
Yeah.
All right, let's see. Let's keep talking about. Let's see what some of these other questions were. If the next Bitcoin halving doesn't create price appreciation, won't the majority of miners bail out due to the loss margin?
So, I mean, with this one, it seems like, people will talk about how it's priced in, but as far as price appreciation, as far as the halving, some people don't think like Bob Lucas. He doesn't believe that the halving has anything to do with price appreciation. He just believes it's because of liquidity. It's what's happening in the macro environment, and then going from there. So for me, if the Bitcoin halving doesn't include price appreciation just because of that, I think it matters. But as time goes on, just like we see like with bear markets, they don't last forever, right? And historically, that's usually been true. And if we go into a bull market, whether that is a halving narrative, whether that is a macro narrative or whatever else it is, I still think we're going to see it. And you gotta understand, I don't personally see how we can't do price appreciation. When I got in 2017, trust me, there was no huge managers or institutions or corporations getting into Bitcoin like a BlackRock and an ARK and a Fidelity and things like that. The president of the United States wasn't talking about it, and we sure as hell didn't have a congressional hearing where half of it was talking about digital assets and cryptocurrency. So when I take a look at that, and I'm thinking to myself, we're only at $1 trillion. The market cap of gold is 12 trillion. For real estate is 281 trillion. And then for everything else that's out there, I mean, it's over a 1 quadrillion. There is no chance that we don't see price appreciation going up. So Bitcoin miners, there's a reason why the hash rate has hit an all-time high in a bearish market, because the miners are thinking the same exact thing. So for this, it could happen. I just don't see the way that it actually does.
Yeah, I mean, I think that a lot of this stuff is based more on business cycles and QE and liquidity than it is I mean, it's like, do we really think that crypto would have done exactly what it did had the Fed not printed $6 trillion? Probably not, right? I mean, there's probably a lot of sort of confluence there. Here's a really good question. I don't know if you guys have heard of this guy. He's wanting to know, how long will the altcoin reckoning last?
Benjamin Cow. I have heard of him. He looks, looks a bit shady, if you ask me.
Yeah.
How long will the altcoin reckoning last? Yeah, that's a good question. I mean, I think altcoins have still got a lot left to bleed, and I think perhaps a Bitcoin ETF approval, going back to that, we could see. I think, as you've said before, Ben, we could see a lot more bleeding out of altcoins and into BTC before anything gets better for the altcoin market. So yeah, I still think it's got a few months to run, well into 2024, I think.
Yeah, Rob, does that sound?
Yeah. I think it goes like this, like that A20 video I did, it talked about as far as like the all-time lows and the dates. Besides those two altcoins in 2018 and 2020, they didn't see their all-time lows after the halving. So we've got roughly 201 days, right? Roughly about 7 months. I think during that time is going to be the hardest, and probably the most when people are going to start to drop out, because you think it's bad now. I think if we start to hear talk about recession, and if we start to see that the signs are actually there, unemployment actually goes up, and then the savings, of course, will go down, we're going to see some really big dips. So really it comes down to this. It's 7 months, and you can do whatever you want to do. We're not financial advisors, we're definitely not your dad. You guys can do whatever you want to do. But in this time frame, you could sit it out like Ben's doing. And the reason why Ben's doing that is because he did the same thing, and he talks about it in the last cycle. I'm doing my little dollar cost averaging, and I believe Guy is doing the same thing that Ben's doing, kind of sitting it out. But whatever happens, you got 7 months to figure out what you want to do moving forward. I think after the halving, we'll see some pretty good times, but how long after that, I'm not for sure. And it really does come down to the macro. And if we see recessions and pivots in July of 2024, or if we see it earlier and the recession comes.
Yeah, I mean, the only thing I've really bought at all is Bitcoin in the last like two years or something. I mean, you even asked me late last year if I was buying alts, and I was like, no, I'll just stick with Bitcoin. Because I mean, like if you think the dominance is going higher, then why take on the risk of the higher risk stuff? Is sort of the general idea. But yeah, like I'm really excited. I mean, once the recession headline hits, like that's probably near the end of the altcoin reckoning, right? Because that's sort of the advertisement to everyone that, hey, liquidity is going to be coming back soon, because there's going to be so much pressure on the Fed to go back to at least looser monetary policy. So yeah, I think Rob's probably right. Like I think it's probably going to end before the halving. And how much before, I don't know, but we still have at least about 6 more months where it could continue. So somewhere in that ballpark is probably the right answer. Sometime within the next 6 months, my guess is be over.
Yeah, I think, like I said, I pretty much parroted exactly what Guy said. It's the same thing. Like, I think we're going to go there. I will say lastly, though, everybody knows I'm a dollar cost averaging since 2022. I do a show every Sunday, and I show you how far down I am. It's not for the faint of heart. If you want to watch those videos, I use Ben's tool for the DCA, and I show you exactly what I've been buying and just how low I'm actually at. And it's depends on your risk level and depends on what you want to do. And if you're okay with that, then it works out. But if it's not, then this is not the market for you. It depends on what. Right. But of course, the people that are here, I mean, Guy's here, Ben's here, everybody's here in the chats. You guys are already hardened veterans, and you've already front ran a bunch of the corporations and institutions anyhow. So congratulations. You're going to probably do really well. Just when? That's the big question.
Yeah. Alts are also tricky, because even if they do go up, doesn't mean that all of them will, right? And it could just be the new shiny ones that go up. But yeah, I mean, that's where we are right now. Let's see if there's any more. Yeah, I mean, here's another one. I mean, it's sort of going back to the ETF stuff, but if the Spot ETF were approved, do you think that it actually is a very bullish thing in the short term, or do you think it's more of those things that's sort of long-term bullish rather than short-term? What do you think about it?
I can see it being. I think there will be a short-term pump. I don't think it will. I honestly don't think it will be this massive sort of non-stop trip to the moon that some people are predicting. The market will certainly pump as a result. Mostly, I would imagine, Bitcoin. Alts may follow, but I think most of the excitement will be around Bitcoin. Someone pointed out in a question on a live stream I did yesterday. Well, if these ETFs are approved, the likes of BlackRock, Fidelity, etc., whoever it is, are going to buy BTC over the counter. They're not going to go onto Coinbase with the rest of us plebs, are they? So that is, the sort of, you're not going to see this huge buying frenzy that drives prices constantly up. I think that's absolutely correct. But I still think there will be interest from retail, and quite possibly interest from retail. I think we've talked before about these retail traders, maybe who are invested in more traditional assets, stocks, bonds, etc., but who are aware of the idea of having Bitcoin as a hedge. I think that could be a moment for many of them, perhaps, to dip their toes into the market, to go, here we are. Here's a safe way of investing in Bitcoin. Here's a way of investing in Bitcoin that I understand. I don't need to download an exchange. I don't need a wallet. I just go and buy it through my broker, like I do all my other ETFs and stocks and whatever. I think we could see interest from those sorts of traders. Will that be enough to send Bitcoin absolutely parabolic? I don't think so. But certainly it'll be a pump, but probably fairly short-lived. And then I imagine we'll settle at a level, a little bit higher than we are now. Maybe sort of around the 30K level or a bit higher. But it won't be absolute chaos. It won't be all hands on deck, so to speak.
I'd like to wrap up with one final question, Rob, and I'll just go to you on this one. Because this is one that I feel like a lot of people, it's kind of this thing that we have in the back of our mind, but and it goes back to that liquidity thing that you're talking about earlier, right? Like is it the halving that drives the cycle, or is it liquidity and the QE and all that stuff? And it's hard to debate that. Like, it has, the business cycle for Bitcoin's history has lined up very, very well so far with Bitcoin going in these bull runs. But what happens if we get a recession, but it doesn't occur in Q4 and it doesn't occur in Q1? What if it occurs in Q3, right? Yeah. What happens then? It's kind of like what would have happened had the pandemic not occurred in March of 2020, but what if it had occurred like 6 months later? Are we all under the illusion that that Bitcoin would not have gone down just because the halving had occurred, or would it still have gone down? And how are you thinking about this? Like, how are you thinking about what happens if the recession comes after the halving?
Yeah, I think of it like it just depends on how severe this recession is. Is it as bad as the 2007, 2009, the Great Recession? Or are we talking about something that was in the 90s where it was only 8 to 10 months? So again, like what I talked about before, usually what happens is we rally into a recession, take a little dip, the market drops off the face of the planet, and then it recovers before the actual economy recovers. So if we're going to look at the averages, just the averages of 10 months, let's say it happens in Q3. So July, August, September. Let's say it happens in September of next year. We see this recession, and it happens 10 more months. What does that put us? That puts us into 2025, into Q2, Q3. When do we have some of the big blow off tops? Well, last time the first one was in April of 2021, and then moving into the last part was November of 2021. So if it lines up, it lines up. I don't know how bad this will be. This is the thing that concerns me about what's happening in China. Evergrande, their CEO is just put under arrest, and we'll see how it works out with the global real estate that's happening over there in China. If that collapses, we see a ripple effects going out through the whole world. But then people will tell me, it's not a big deal because, of course, communist China or the CCP, they'll just print more money and they'll do their thing. But again, how long can we do it? To sum it all up, I'm waiting for a recession. I think it will happen. If we're looking at 10 months, it'll just push us into 2025. It just really depends. And you're talking about a recession, a great recession, or a depression. I don't think we're going to be there, but we'll see.
Fair enough. Well, guys, we're at the top of the hour, so why don't we just go ahead and wrap it up. If you're not subscribed to either Rob or Guy, links to their channels are down in the description below. Next week, I believe we will be on Rob's channel.
Hey, all right.
Yeah, so we should be on Rob's channel next Thursday, so make sure you are subscribed to him for next week, and then for Guy's Coin Bureau Clips channel, we'll be there the week after. So again, links are in the description below. Thank you guys for tuning in, and we will see you guys next time.
Adios, everybody.
Thanks, everyone. See you next time.